Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Wednesday, August 11th. This will be a technical analysis breakdown. So if you're somebody that uses technical charts within your decision-making process as a trader, or who knows, maybe you're just interested in learning more about charts and how they can be used as a tool for traders to make good decisions, then this will be a video for you. And then real quickly on that note, just keep in the back of your mind that as I go through the content here, that if you're liking what you see and you want to learn more about this tool and how traders should be using it and why it works, then I want you to personally invite you to get signed up for this live class that I'm actually offering tomorrow on Wednesday. So it'll be completely live and it is free. So if you're watching on YouTube and you want to get signed up, just go down into the description box. And then if you're watching at claytrader.com, anywhere else, anywhere on the page, there's going to be several areas that you can click. So like I said, just keep that in the back of your mind. And if you like what you see as, I go through the video, then yeah, get signed up and, you can attend the class. So first stock here, ticker symbol AMC, just had earnings, and it was, there's no need to beat around the bush. A brutal day, a classic buy the rumor, sell the news, and had the gap up this morning, made a move all the way up there, and then from there, basically just a gap and trap as the price went down. So yeah, today in and of itself, very clearly not a good day. But does one day make or break a chart? Absolutely not. So from the overall standpoint, the chart is still hanging in there. And I should note that these are 30-minute candles, meaning each one of these candlesticks represents 30 minutes worth of time. So I'll be using that time frame, for the remainder of the stocks too. But point here being that, yes, today, bad, rough day. However, from the overall standpoint, still have an opportunity as the price did at least maintain up above this area right down there around the $31 mark, which I would say is very important because 31 is basically that line in the sand where if the price were to drop below there, then all of a sudden you have the price having gone right back into this lower portion of the chart. Or in other words, that would be implying that after a very, very impressive move in the upwards direction, the price is now essentially gone all the way back down to where it was, which, not to insult your intelligence, not exactly a sign of true strength. But to give credit where credit's due, not only did $31 not get tested, but it has been holding strong. So 31, certainly a very important level, like I said, for that reason. If 31 does get tested and is broken, next key level that, I think has a very realistic chance of getting hit is $29.75, if not even down around the $29 mark. But also don't want to get too far ahead of ourselves because so far the price, like I said, has respected the $31 mark. If there are any sort of types of bounces, well, then nothing new here to report. For those of you that have watched past videos, you've heard me talk time and time again about that pink line up there, the 200 period moving average. So let it remain public enemy number one from the resistance side of things. But given the current context and the downwards pressure that showed up today, right now, the more pressing concern is not necessarily breaking levels of resistance, but more so trying to stabilize out. Next one here, ticker symbol ZEV, made a whole lot of noise today, and rightfully so when you consider just the massive amount of volume that came in today. So moral of the story, certainly a lot of eyeballs going to be watching this one headed into Wednesday, and a very well-defined area of resistance here, which sits right up at this area. Let me actually just get this drawn up first. So let's just call it the $12 mark, and I assure you, me drawing that trend line, I'm not trying to come across as some sort of great discovery on my part, not trying to imply that it's a great talent. I assure you, people that use charts, understand charts, have drawn that same line. And I say all that because when a lot of people are watching the same level, wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very nice, dynamics. Now, is anything guaranteed? Absolutely not. But is that at least is it at least a rational thought that if the price can come up here and get the break of that $12 mark, that break in and of itself could cause quite a bit more buying and upside pressure? Absolutely. Again, not guaranteed to happen, but that's the power of charts. It's leading you to formulate a rational thought process, not some sort of random thing or just throwing a dart and guessing. No, you're thinking and looking at all this from, okay, yeah, that could very well happen, not guaranteed, but by no means is that some sort of random area to be paying attention to. So $12 certainly going to be that main area of resistance. And then as far as supports are concerned, down here around the $9.50 mark. And then as from a kind of just quick pattern perspective, if I do this really quickly, so if we call that the pull portion, we have that the resistance, that's the support. And you put the little golf hole down there. You could call this just a bull pennant pattern. But moral of the story, looking very good headed into Wednesday. So we'll see if this breakout can continue. Next one here, ticker symbol FULC. And again, like the one we just looked at, ZEV, very, very impressive movement from the volume perspective. And the nice dynamic here is that the price has pulled back. So you always got to, be a little fearful out there and always be questioning yourself. All right, am I getting caught up in the excitement? Am I suffering from FOMO, right? Fear of missing out, and you could potentially, chase the price. But that is no longer a concern because the price has pulled back. Now, for some people, they're probably very nervous right now because that there are some people buying up around there, and then this pullback has occurred. So if they're still in the trade, then yeah, they're probably not feeling so good right now. But for those people that are still observing and wondering, all right, am I chasing? No, at this point, you wouldn't be accused of chasing because there has been this pullback. So now it's just a question of if you still believe in the upwards momentum, well, this could very well be a nice buying opportunity because you got the pullback right here. Now, if you think this is the top, if you think this is just a start of a much bigger move to the downside, well, then obviously at that point you wouldn't want to touch it. But the idea here is that there's very clearly a lot of upwards momentum. The momentum has pulled back here a little bit, but the grand scheme of things, the context is still bullish. So it's at least worth keeping an eye on, with an interesting level of support being right there around the $17 mark. And then as far as areas of resistance are concerned, that area right there seems to be a interesting trend line. So just like what we just looked at with ZEV, if I draw this in real quick from a pattern perspective, put that golf hole down there, we have ourselves a nice little bull pennant pattern here. But again, the main dynamic here is you got the pullback, not just a question of do you still believe in the upwards momentum? Because if you do, then this right here could present a very nice buying opportunity. Next one here, ticker symbol IMV, and this is completely just a very straightforward, at least setup in my mind, and it's all about, all right, this thing is looking terrible. It's looking like it can't get much worse, but let's see if this thing wants to get down to this $1.75 mark, potentially close this gap, and then maybe, just maybe, that's where it finds some support, and you could get some sort of bounce. Now, I'm not saying it's going to go all the way back up to the highs, but the point here being is right now, it's looking pretty rough. It's looking pretty bad to think that the price was all the way up there, and now it's all the way down there. And to be fair, this could be the end of the line. Maybe this was just one big pump and dump today. That's why, as always, risk management matters. So I'm not saying that it's for sure guaranteed to bounce off $1.75. But my point here is this. If you manage risk down there and it doesn't bounce, okay, you're taking a small, well-defined, controlled loss. But if you get some sort of bounce to the upside, then the reward you're looking at relative to the risk that you were taking in the first place is a good situation. So again, is $1.75 a guaranteed spot? No. But is it some sort of random just guess? Absolutely not. There's a track record here of it being a former area of resistance. It's essentially that gap closed location. So from a risk versus reward scenario, a very interesting situation. But again, you got to acknowledge the fact that things are looking pretty bad right now. However, that's also one of those interesting situations when things are looking really, really bad. Sometimes that's right when they're about to turn themselves around. So we'll see if that happens or not over the next couple of days. Next one here, ticker symbol AMD. Now, this will mean much more to those of you that watched the previous video I did on this one. This is just the power of charts, right? The practical power of this tool. And I promise I have not moved that red line at all. If you don't believe me, I'm not offended. I get it. I could be a total stranger to you. All I will say is you can just go back in the video archive and watch the previous top 10 video. But I put this trend line into play. And look at the power of trend lines. Look at the power of charts. Like I said, I have not moved this line, and I'm not patting myself on the back here, but I am patting the tool of technical analysis. Is it a perfect tool? No, nothing's perfect. Is it valid? Is it practical? Absolutely, and we have a real-life example of that. So, check this out. Put that red line in there and look right where it got rejected today. Literally, right at that red line. So point here being that red line there is still definitely going to be that main area of resistance to watch moving forward. I'm going to go ahead and get rid of that line as it served its purpose for now. But in my mind, as far as AMD is concerned, the selling pressure is still very clearly there, and the quote-unquote selling pressure best visualized by that downtrend line right there. So I get it. Me just saying selling pressure, those are just words, but that's why I love charts. They allow you to take words and phrases and make them very visual. And in this sake, the visual of selling pressure still being represented by that red line there. So we'll continue to watch that from the resistance side of things. And then as far as the next level of support down there at $1.04, but yeah, crazy just how well that trend line worked out. But it's also just illustrating the fact that there is still definitely selling pressure out there on AMD. Next one here, ticker symbol FSR, and really like this one because it's a fantastic setup. So the first part of the setup is based on the fact that, now of course there's a whole lot of volume on it, but what I like about it is things were looking very bad, right? To think that the price at one point was all the way up there during that opening 30 minutes, then dropped all the way down here. But what happened after that? Well, after that, it was just a slow and steady march back to the upwards direction. So there is very clearly some signs of power here. There's an illustration that the party may not be over. Now there's still work to be done, and the level here that I think is going to matter a whole lot to people is right up there around the $18.75 mark, which was essentially the grouping of some data points right there. And sure, the price didn't hit it this afternoon, but generally speaking, got up around that area. So from a breakout perspective, while nothing's guaranteed, is it valid? Is it rational to think that if the price gets up to that area and then can push up through it, that could present a nice, upside buying opportunity, a nice breakout? Yeah, that is definitely by no means some sort of random area on the chart, especially again, when you factor in the context that the price has shown some strength by recovering from those lows all the way up to where it has. But again, maybe this is just some sort of dead cat bounce and it rolls back over, which is why for those people that like confirmation, I think that red line there offers a nice little confirmation point too of whether or not this continued strength is going to build upon itself. If the price does roll back over as far as supports are concerned, interesting level going to be down there right around the 1750 mark. But yeah, all in all, very interesting setup. Again, based around the premise that the price did basically show strength all afternoon long. So we'll see if that can get carried into next week, or excuse me, not next week, but tomorrow on Wednesday. Next one here, ticker symbol ORPH, and very interesting setup here. Kind of tricky because you know, rightfully so. If you're confused by it, I understand. I mean, I'm confused by it, but that's also where the opportunity lies because yeah, big move up. And then had a pretty big pullback, but it's not like the pullback was a crash. It's not like the price completely went right back to where it was. And the interesting thing here is that the price is still up above that pink line there, which on my chart is the 200 period moving average, currently valued at 485. So if you're somebody that likes to play pullbacks and likes to play situations where you know that there was some signs of strength and not just a question of, okay, if the sign of strength comes back, then I mean, things could get really interesting. But you also want to manage your risk. Well, then that's where that 485 mark comes into play because, you know, like a previous stock, I don't remember which one. If the price comes down there and then just continues to crash, okay, well, at that point, you have a very well-defined area of risk. And assuming, of course, you can honor, you know, your stop losses and risk, you know, manage risk the way it needs to be, well, then you're risking a very small amount compared to if the price were to come down here, find some support on the 200 period moving average, which would not be shocking, and then all of a sudden recover back to the upside. So like I said, if you're a breakout player, then none of this really pertains to you because, you know, we're talking about playing a pullback. But if you are somebody that enjoys having prices come down to you so that you can manage the risk, you know, from a much more kind of straightforward way, then this could be a very, very interesting setup. But yeah, no doubt about it. This thing proved today that it can move, and it can move very, very quickly. Not just a question of doesn't want to pull back a bit more and then recover back upwards. We'll get our answer. It's looking like on Wednesday. Next one here, ticker symbol FCEL. Huge, crazy movement today, but things stabilized out and is now given some very well-defined areas. And, you know, again, along the lines of, am I getting caught up in FOMO? Am I chasing the price? No, absolutely not. Now, these people that were buying up there, yeah, they got caught up in the FOMO. They chased the price, and now they're sitting, assuming they're still in a very interesting, very probably nerve-wracking situation. But as far as what's played out from there, like I said, two very well-defined areas. First level, as far as support, right down there around $7.30. That was a pullback point. You can see there are some other data right around that area. So, and again, these are levels that are not like some sort of great discovery. I assure you traders around the world have noticed these dynamics. So it goes back to that whole self-fulfilling prophecy conversation. So that'll be the main level here that a lot of people are watching. And then just from the breakout standpoint, again, I assure you a lot of people have noticed that, you know, there's basically been this little sideways channel that formed throughout the late morning and rest of the day. So moving forward now, it's just a question of, well, who is ultimately going to win out of the battle of this sideways channel? Are the bulls going to win out by getting a breakout to the upside, or are the bears going to win out with a break to the downside? But that's going to be the big question mark moving forward. But the point here being is both of those are very well-defined areas, so you know a lot of people are going to be watching them. So from a trade plan development standpoint, again, nothing is guaranteed, but it certainly makes a whole lot of rational sense to keep an eye on both of those areas. Next one here, ticker symbol NSAV, down in the world of penny stocks. Did this one several times during this big run up right here, and then it did start to pull back here. But today, just a brutal day, and essentially looking like this thing was just one big old pump and dump. I mean, and what gives me the right to say that? Well, let's look at where the price is. The price, when you match it back up to over here, is basically where it was when this big move started. In other words, price, generally speaking, started there, went all the way up there, and is now all the way right back down there. And that's basically what a pump and dump is. Great, huge move. And then all of a sudden, within a relatively small amount of time, and this all happened, I don't know what, like 2 days. So a couple of weeks up, and then basically 2 days right back to where it started. So now, can the price recover? Yeah, the price can recover. I'm not saying the price can never go back up again. But as far as that big old nice uptrend right there, it's all been eliminated in, 2 or 3 days. Which is just rough to see. If there is going to be any sort of bounce to the upside, that first key level of resistance is going to be right there at 0.035. And then as far as supports are concerned, nothing fancy or complicated here. Just a question of, well, where did the bleeding finally stop today? And that was down there at the 0.011 mark. So keep an eye on that. And obviously, if the price goes down to 0.011 and breaks down through there, well, that's just putting the price even lower than what it was, which just, adds to the fact of this was looking like one big old pump and dump. Next one here, ticker symbol MDIA. Nice pattern here, and kind of talked about all these, regardless in terms of, well, the pullback. So now you don't have to worry about chasing. So I've gone through all the talking points already. So I'm not going to, say the same things over and over again. But let's just get the pattern drawn out here. So, very straightforward level of support right down there around, let's just call it $9, $9.10. But you can see literally 3 candles in a row, the price bounced right off that area. So a pretty distinct area of support right there. And not to mention, this was a former breakout point. So a classic example of a resistance now acting as support. You could throw that right into a textbook. And then as far as areas of resistance are concerned, in my mind, this area right up here, I'm just going to split the difference around the $11 mark, seems to be that key level. So from a pattern perspective, we have this area right here. We have that level of support, and then we have, the big surge right there, which creates the pull portion. So in this situation, what would be known as a bull flag pattern, but definitely very interesting, and you got to like the fact that the last 30 minutes, price really came to life once again with a nice surge of volume. So does this mean anything? Does this mean that there's another surge that's going to come to potentially push it up through the top of the pattern? That all remains to be seen, but it was good to see that last 30 minutes, the bulls did show back up again and showed a nice green candle there. So we'll see if they can build upon that moving forward and potentially get the breakout through the top part of that pattern right up around the $11 mark. So that wraps up the top 10. And just again, I want to personally invite you to get signed up for the live class that I'm offering tomorrow on Wednesday, August 11th at 7 p.m. Eastern time is the key. And like I said, if you like what you saw, then get signed up. Learn all about how charts work, how they should be used, how they should not be used, and just the power of how they can be used as a very practical tool to build consistency as a trader. And then as far as these top 10 videos are concerned, just a quick request on my part: if you do enjoy this format, if you enjoy this structure, then let me know that it's worth my time and effort. Because from a time management perspective, I want to make sure that I'm using my time wisely. So if you do enjoy these videos, then do 2 things: hit the like button, leave a comment. The comment could be hi, could be a smiley face, but those 2 things communicate to me that it is worth the effort. It is worth the time to put these things together. And as long as I know that's the case, then I have no problem continuing to do these videos. And again, if you're interested in learning more about charts as a tool, how to use them to build consistency, then I want you to get signed up for the class. Everybody take care. Hopefully you had a good one.